So the Indian IT sector, the one that's powered the Indian economy for many decades, is right now trading at its lowest valuations that I've seen it for a long, long time. And yet not many people are talking about it. Now, in reality, while everyone's busy chasing manufacturing, fund houses are busy launching consumption funds, this is a forgotten sector primarily on account of the fact that, there was a view that Indian IT companies have not embraced to artificial intelligence, and they're typically legacy businesses which are not doing anything new or innovative. But remember, markets don't reward what's hot. They reward what's ignored but improving. I am personally very bullish on Indian IT sector. Many people have asked me to do a video on this, and I've recently purchased 2 IT stocks which I'm going to talk about today. But first, I'll talk about why I'm so positive on the Indian IT sector. First, of course, it's the valuations. The sector is beaten down for nearly 2 years. Thanks to global slowdown fears, slowdown particularly in developed countries, layoffs in the US, reduced tech spending. But in reality, there isn't much of a slowdown. The problem has been layoffs, yes. India-US trade tensions, yes. And a brunt of that is being reflected in the IT sector. Despite the fact that, even though earnings are not improving, they're stagnant, but it's not like Indian IT companies' earnings are going down. So that's the first reason, valuations are extremely cheap. The second reason is, as I said, the US-India trade tensions. And my view is whenever there is a concrete solution to this, whenever the tariffs are, solidified, there is a complete clarity in picture, there would be a bounce back in the Indian IT sector. The sentiment towards Indian IT companies will start changing because, 60 to 90% of the revenue for Indian IT companies, most of the Indian IT companies, especially the ones I'll talk about today, comes from the US. So you have a situation where, stocks like Infosys and TCS are trading at valuations of 20, 22. Their dividend yields are close to 3% now. That's, we've not seen that in my memory. We've not seen that for a long, long time. I don't know when was the last time when they had dividend yields as high as they're trading at right now. The other thing, when the dollar is strong, that's the third reason why I'm really positive on this sector. When the dollar is strong against the rupee, these companies make a lot more money because they earn a lot of their income in US dollar terms. But no one right now is talking about it. Typically when dollar was strong, people would talk about buying Indian IT companies. Right now, no one's doing that because the sentiment is so negative. The prices for these stocks have gone nowhere for the last 2 years. So there's chasing the stock prices rather than chasing fundamentals. That's what's happening in the market. Be that as it may, I feel that whenever the tide turns, whenever the sentiment changes, this is one sector which will lead the next rally for Indian stocks. So let me talk about the 2 companies that I've recently added to my portfolio, and this is beyond the Infosys and TCS, which are the large cap Indian stocks which I already hold. So the first company that I really liked was Intellect Design Arena, and they're doing something quite revolutionary, which is no less than trying to change the very platform on which, the core banking software for many banks operates. So let me give you an example. Finacle, which is developed by Infosys, is used by banks in 94 countries, and according to one source, it serves over 848 million people. That's about 84 crore banked customers. So that's 16 to 17% of banking customers around the world, and that's huge, right? So what Intellect Design is doing, it's trying to change the core banking software which a lot of these banks use, and they've got orders from some of the bigger banks in the West. And why this is important and why this will have a major implication if they were to succeed with this is because Finacle and these old core banking softwares are not built for the newer apps, the artificial intelligence apps which could be coded on top of them. So it's mostly about the code and how it's written. So the code that they're developing with their new app is such that it would be lighter. It would enable a lot more tools to be embedded on top of that. I know a lot of people get confused about what is new that this company is doing. So I'll try and explain in a simpler way. Think about your relationship manager at the bank at which you have your account. Every few months you talk to them, maybe about your credit card, maybe about a loan that you're planning to take, maybe about an investment that you're planning to make. They get to know you bit by bit, but then a year later, that relationship manager changes, somebody else comes. Now imagine a situation that whenever you've spoken to your relationship manager, everything that you've spoken to them about over a phone call or over a Zoom meet or even in person gets stored somewhere. So, the company has 10, 12-year data of whatever your interactions have been. So they have a product called Laser AI, which sort of makes a transcript of everything you've spoken about, makes it in paper form. Even if you have like a personal meeting with your RM, he goes back and feeds it into the system. Over the years, it develops an entire background of what your interactions have been. So that system knows you a lot more than what even you remember about your priorities. So when you talk to them about the fact that you're planning to buy a home, or you're planning to get an auto loan, or you want a credit card because you travel a lot, you like a card which would give you points for hotel stays or for dine outs, all this information about you is being stored in the system. And the bank already has your demographics, like your age, city, investments, lifestyle. All of this is put into a structured information, and fast forward 8-10 years, the data is all there, it's all saved, and the bank knows exactly what kind of person you are, and it could push in products based on that. So for Intellect Design Arena, the core banking system which they're developing is called eMash.ai, which is the core banking platform. I mean, if they can succeed with that and get a couple of big orders with banks to use that would be, insane growth in revenue that could happen. And the other app which they have, or the other platform which they have, is called Purple Fabric, which is embedded on top of it, which can be used to develop a lot of AI tools. Now, expanding on my first example that I was giving you, think about it as, in terms of the same relationship manager and how much the bank knows about you. It knows your age, location, credit card swipes. Then there's information which they get from credit bureaus. All of this is put together and created in a structured format. So this is the process flow if you have a look at it. Now, you do UPI transactions that regularly show the payments that you're making for another credit card bill, maybe your mom's credit card bill, maybe your wife's credit card bill. On your credit card, you're spending a lot of money. Recently, you've started spending a lot of money at pharmacies or chemists, so they know that, you have some healthcare emergency coming up, so your ability to take credit goes down. So all of this is part of data analytics, which is, in the first part, it's called data engineering. And in data engineering, it standardizes the data basically from millions of files that it has, and it allocates all data specific to one customer. So for instance, my credit card has my name registered as R. Sharma. Then my bank account has my name registered as Rajat Sharma. It figures out that it's the same person. Then it takes my behavior pattern based on my credit card spending and based on what UPI transactions I'm doing on my card. Then there is pattern analysis, in which, the sites which I'm visiting, the places where I'm spending are also fed in such a way that it already allocates for millions of customers that, these are the customers who are making rent payments above 80,000 per month. So these are ripe for, and recently they've started going to real estate websites. So these are ripe for a bank loan. So the banner ad that you'll see would be home loans at 8.45% at 60,000 rupees of EMI, which is your exact rent. And then it'll break it up and make it more attractive for you. So this is what data analytics is, and this is what this company is doing. So both of these companies that I'm talking about are available at reasonable price to earnings multiple. Latent View Analytics in particular is trading around 15% below its 10-year price to earnings multiple, and Intellect Design Arena is around 15 to 20% more expensive than its historic price to earnings multiple. Having said that, what I'm betting with these companies is future growth. Intellect Design Arena particularly has gotten expensive because we've seen a run up in the last 3-4 days, the last 3-4 trading sessions. It's up around 20%. It reported a 94% increase in its net profit. Latent View Analytics yet to report numbers, an excellent company. So these are the companies which will benefit from, which I keep saying, which will benefit from the AI boom. Recently you must have all been reading reports that a lot of the artificial intelligence boom that we're talking about is companies where a lot more money has been invested, like companies in the US like Nvidia and A lot of these companies which are into not just chip manufacturing but developing AI like ChatGPT, Perplexity, the valuations there are so high because a lot more money has been invested in them and they don't have a clear business model, clear revenue model. On the contrary, companies in the mid-cap space in India like Intellect Arena and like Latent View, they have a very viable business model. They're using that artificial intelligence to develop products which can help banks and FMCG companies and pharma companies to scale up their operations. Most of their business is focused in banking and financial services. And both these companies get up to 90% of their revenue from the US, which is actually a positive thing for the reasons which I discussed at first. Very high US dollar, so the earnings will probably look much nicer going forward. They're at the cusp of creating, I feel, something big which, if is adopted by a few companies also. These are such small companies, market capitalization of 16,000 crore for Intellect Design Arena, 9,000 crore for Latent View Analytics. So small cap companies, do your own research, be careful before you buy these companies. I'm giving you a disclosure, I have recommended these. I have this in my own portfolio as well. So these are the companies where I think, the froth that needs to clear up in artificial intelligence space, particularly in the West, when money moves out from there and finds its way into smaller companies which are actually using the AI tools to develop something. These are the kind of companies where, a few hundred crores could take the valuations much higher. So IT as a sector, if you look at it from a top-down approach, is placed at a very, very good valuation right now. Even for that matter, large cap IT companies like Infosys and TCS. Infosys, I've held it for a long time and it's one of my favorite stocks. They're doing their own stuff with artificial intelligence. Keep also in mind that there are a lot of other IT companies. It's just that I wanted to discuss these because I really like these. I looked at other companies. You may want to look at Zensar Technologies. Slightly expensive, trading at a multiple of 51. But I feel that these mid-cap IT companies right now in India should be a perfect hunting ground for anyone looking to, have slight risk appetite, buy something which could, you'd allocate 5 to 7% of your portfolio in these, which could give you a very, very good return going forward if some of their products were adopted by some companies. So, the risk reward right now favors them a lot. So that's my view on mid-cap IT stocks.